Good morning, it's Monday the 6th of February. This is the Phoenix Blue Update and I'm Tom Colley. I'm taking you through the news and the charts this morning. Start with a summary of last week. We had central bank announcements from the Bank of Japan, Bank of England and the FOMC, none of which succeeded in giving the markets much direction. Particular interest is the dollar because the dollar is dominant over everything at the moment. We're going to have another week undoubtedly where we have a lack of direction in the dollar. We've very little news out on the US this week, but we do have Donald Trump who undoubtedly will be intervening through the week. We are therefore unfortunately preaching caution on the majors and minors. We have decided to identify some opportunities on the cross pairs, which are predominantly technical trades. We'll bring these to you day by day if and when they set up. But in respect of the majors and minors, we will be particularly cautious this week, simply because of that lack of direction. Okay, let's have a look at the news from Friday. We had overnight the cakes in manufacturing PMI out of China, which was a little bit disappointing. GBP services PMI disappointed, and all through last week we had some disappointing data on the pound. So we are still biased short on the pound, but very aware of the progress of the Brexit bill through Parliament. So that's another market that has the potential to be quite volatile on the other side of the dollar this week. Here's the FOMC itself. We did have very good non-farm employment numbers as we expected based on the ADP figures that we discussed on Friday. However, we saw some really disappointing average hourly earning figures down at 0.1 from 0.3 forecast. So that very much tempered any bullishness on the dollar from that data. We also disappointed on unemployment, and then subsequently ISM non-manufacturing PMI coming in below its forecast. So all those negative factors weighed against the dollar. And then Friday afternoon we had President Trump authorising a review of what's known as the Dodd-Frank legislation. This was legislation brought into control investment and banking after the 2008 crisis. The review is with the aim of removing several items of regulation there. So that was seen bullish, particularly by the stock markets. A lack of regulation there, opening up more freedoms to banks and investment organisations. Okay, we also, going forward to today, we've had a bank holiday in New Zealand overnight, so the Kiwis are market to be aware that there's been little no overnight activity there, and we've already had overnight retail sales on the Aussie, which again disappointed. Right, over to the charts themselves, and as I said, we had very much a ranging with volatility week last week. This is the dollar index. We're within this falling wedge here. We are looking for a clear break above that to give us some dollar strength. But it's where that comes. When we've got news like last week, the FOMC, we have a time and a place to anticipate movement. The problem when we're relying on politics and Donald Trump is we don't know when this information is going to come out, let alone what it might tell us. So that's really the reason we will be particularly cautious this week. Over on the yen, we had something interesting out of the Bank of Japan on Friday. They at first bought less bonds of one type than was anticipated. That gave short-term strength to the downside on this chart to the yen, but subsequently announced they were going to buy a unlimited amount of 5 and 10-year JGB bonds going forward, and to quote the bank, this is to hit CPI targets as soon as possible. So basically that was really a further easing message and gave the yen on Friday some recovery back to the long side on this chart, or a bit of weakness. As you can see, that's not been a great deal, but certainly intent from the Bank of Japan that they are still looking effectively to devalue or keep the currency value as low as possible whilst they target their inflation. Over on the euro, well, we a nice opportunity here at around 8.20, 8.25. We had this as a level last week. We're now somewhat ranging within this area here. I will be looking for another revisit, a change of cyclicity at that level. I will be looking to potentially trade that down at smaller risk, simply because that is a very nice level. We were initially cautious on that and didn't take that as a market cap because of that spike there that I discussed last week, but our bias is still to the downside on this. But as I said, in the current environment, the volatility means that we will be very cautious in the market. Here's the Aussie. Now there's a clear level through here in confluence with this trend line through here at about 7.75, I think it is. We'll be looking for an entry to the short side there. We will be looking for it as price action. It isn't a market cap entry, but it is an entry that would interest us, and one of the few that would interest us this week. Over on the Kiwi, we also had a trade at this level here at a 7.330. We got short, took 50 pips, stopped to break even, and price took us out in the high of 2 days later here. This is another level that I would be interested in taking again on an intraday basis, looking at price action or change of cyclicity. Or if we get a move below to the downside here, the Kiwi is a currency that was had showed less strength against dollar weakness last week, so I see the potential for immediate downside on the Kiwi ahead of the immediate downside on the Aussie at that level we've just discussed. Another market worth watching is gold. We're through at a key level here at 120.20. Sorry, 12.20 through this level here. You can see we closed above this level on Friday afternoon. We have already had a bullish move this morning at the time this slide was taken. I'm looking for this high to be taken out here. An aggressive trader might take this as what we call advanced price action. We expect there to be stop losses for short trades above there, so we would expect price to move through that level quite quickly. A more cautious trade would be the pullback to the 220, and then we'll be looking for a target at 12.50 and the next key level there. So as I've said more than once, it's a week for caution on the majors and the minors. We will bring you opportunities on the cross pairs as and when they set up. We will be taking those at a lower risk because we don't have fundamental bias on those. They're purely technical and away from the volatility on the dollar. Okay, just another quick reminder, this event's coming up quickly now. Thursday next week, the next free trading event, trade alongside the Phoenix Blue fund traders on Thursday the 16th of February in London. It's an afternoon event, absolutely free. Come along, ask questions, find out exactly how we analyse the markets and how we take advantage of that analysis. If you want to know more about that, email us at info@phoenixblue and headline your email free trading, or contact us through the contacts page on the Phoenix Blue website. Okay guys, that's it for today. Sorry for not having more to offer you, but it really is now is the time to protect your capital. Don't go looking for trades where there is higher risk than there would normally be because of that dollar volatility. Let's have a careful week and be in the market for when the opportunities arise without having losses on our accounts. Okay guys, thanks for listening, and we'll speak to you again in the morning. Take care, bye-bye.